And Satin Credit reported their Q4 numbers. A good set of numbers has come in. NII seen a growth of 33%. Profit seen a growth of 58.6%. Highest quarterly disbursements of the company are at 2,546 crores as well. And to talk more about their numbers, we have HP Singh, CMD at Satin Credit Network, joining in with us this afternoon. Thank you so much, Mr. Singh, for joining in with us this afternoon. This is Vinny this side. And, let's just talk about in terms of the erratic monsoons which are there in the country, the El Nino, FMCG commentaries coming in that rural wages actually could be some bit under stress. Want to understand in terms of, the rural sentiment on the ground. What are you seeing for your sector, your company? How are the disbursements on ground shaping up then?
So I think, first let me clarify in terms of the erratic monsoon, which El Nino, which people are talking about. If you look at the wheat output, the reports are that wheat output is up by about 14% in India. Now that augurs very well for the income levels for the farmers really coming up the curve as such. Also, if you look at it, the pent-up demand post the pandemic has resulted in income levels increasing as well as the productive business in the rural space coming up, in a very positive frame. Looking at this, the demand has really shot up in terms of the way we look at credit and the disbursements. That is the reason why, we could have a very solid quarter in terms of our Q4, where we've done the highest ever disbursements ever. The rural economy is to a large extent insulated from whatever happens the urban economy in terms of inflation as well as the other factors. But having said that, the income levels along with the agri-allied activities has really come up in the space across. So erratic monsoon, no monsoon on the ground, definitely there is a lot of positive which is going on in terms of the credit quality as well as the disbursements which are going on.
Sir, but could you also just talk to us about gross NPA? There was a very, very stark improvement in Q4 that was seen. Can you just talk to us about that side of the market as well?
So what we've done is post the pandemic, we really looked at re-engineering our complete processes and the underwriting mechanism. So based on that, our GNPA, after all the write-offs and the provisioning which we had to create, are all finished of the pandemic, whichever woes were left. Now, when we look at the current portfolio, which is close to about 95% of our total AUM, that portfolio which emanated from July 21 onwards till date, has just got a PAR or maybe a GNP of 0.3%. When we talk of 0.3%, which is probably one of the best in the industry, as highlighted by Cliff Highmark, what we are looking at is how we are able to manage the portfolio quality in terms of disbursement, which are happening to our existing as well as to our new clients. And this is also a prelude to whatever has happened in terms of income levels being generated at the lower levels. The NPA ratios will get better and better as we go further in the quarters. Once, we are through with about the 100% book, right now it's about 95%, but moving forward ahead, because of all these factors, I think we will have lesser NPAs moving forward ahead.
Talk about the system and processes. Do you think that, there was a lot that the sector had to deal with in the last 6-7 years, whether it's, demonetization, whether it's GST, whether it's what happened with COVID. You think finally some stability is returning and companies are getting their act together as to how they need to fund in this post-COVID world?
Yes, exactly. I think, you said it right. Technically, what has happened in the last 5 years, I think, we've all re-engineered ourselves and looked at the sector from a very different angle as it used to be before demonetization. So having said that, I think, on the ground, post demonetization, post the pandemic, we are all looking at growth, which is now coming in because of the pent-up demand, as well as the increased activities in the economic arena of the rural space as such. Now, having said that, again, the factor is that all of us have to build in our DNA specifically. So for us at Satin, what we've been able to do is that we have looked at every granular detail post the pandemic to see that we are able to really look at the asset quality in a nutshell rather than just purely looking at disbursement. So having whatever we've done in terms of our processes, I think that is now paving and it's taking shape right now with the GNPA levels now coming on across it.
Right. Just a word in terms of capital. Can you just talk to us about, how is the market treating you in terms of normal capital, and are you looking to raise capital? I am talking about the debt capital, and then are you looking to raise any equity?
So on the debt capital front, we are still very we are very lowly geared. In fact, so we have got a lot of room in terms of growth. We are just geared at about 3 times our capital. Having said that, if we look at our capital adequacy is close to about 27%. It is 26.6%. For us to grow 25%, which is we have given our guidance, we don't require any additional capital because of the high capital adequacy which we've got. But if we surpass this growth guidance, and if we require capital, it's not difficult for us to raise capital. We've been raising capital across the years as such. So, having said that, the growth guidance which we've given at about 25% plus, I think we still don't require capital now at the current juncture.
Okay, Mr. Singh, thank you so much for joining in with us this afternoon, giving us an insight on the company, what should be expecting going forward as well. Thank you so much. Okay, on that note, we're going to sip into a very short break. Okay.